Most investors lose money in junior mining stocks, not because the sector is broken, but because they don't know how to decode them. Headlines, hype, a few flashy drill holes suck people in, and 80% of those companies will never make it. I'm Andrew O'Donnell, founder of The Market Mindset. And after years in finance and watching billions flow in and out of this sector, I built the drill sheet. 10 factors, 10 minutes, one score that filters out all the noise and shows you which stories deserve your money. First, rocks matter. Without continuity, without scale, without real 3D models, you've got nothing. The drill sheet asks, is this deposit a system or is it just a one-hit wonder? Without that foundation, the stock dies. Second, bet on people, not just rocks. Has management raised money before? Have they built a mine? Have they sold a project? The drill sheet scores the team the same way Wall Street scores CEOs, by track record, not by promises. Third, catalysts move stocks, not just rocks. Geology is the foundation, but stocks reprice on events investors can trade. Drill results that prove scale, JV deals, financing, resource updates. Without catalysts on the horizon, even great geology won't move the share price. The drill sheet maps those catalysts on a timeline, so you know if you're looking at the next re-rate or just watching cash burn. Fourth, know your multiples. If you're paying $100 million market cap for a story your peers are paying $20 million for, you're the bag holder. The drill sheet benchmarks juniors against peers to know if you're buying leverage or paying for hype. Now, let me be clear. The drill sheet is not a magic number. It's not a crystal ball. It won't predict the future or tell you when to buy or when to sell. What it does is far more practical. It filters out 80% of those juniors that are just noise, and it shines a spotlight on the small minority with legitimate prospects. It's the fastest way to reveal true potential and to know the right questions to ask next. That's why we tie it to CEO interviews. We've done hundreds of CEO interviews. The score points that spotlight, and the interviews let us drill deeper. This is book one of the Drill Sheet series, Unlocking Junior Mining Opportunities. 10 factors, 10 minutes, one score that filters noise and shows you the minority of juniors with a real shot. Here's how to try it. Download book one free right now. Every Friday, we go live with subscribers and we break down the 2 companies that we scored that week. If you subscribe now for just $9, we'll run a drill sheet on your pick, the company you want to see. Send us the ticker and you'll see the framework at work. Stop guessing. Start investing like the pros. Download Unlocking Junior Mining Opportunities today and join us on Friday.
Good morning. Canuc Resources is transitioning from a long period of quiet or dormancy into a real execution-focused exploration phase for 2026. It's hard to say that. They have 2 projects that have underlying IOCG style geology that I want to talk about with Chris Berlet, who is the CEO and director. This also gives us a unique position to talk not only about the technical aspects of the geology, but also Chris also runs mineralprices.com. So he is daily very fluent on commodities, what's happening in commodities, as well as the ETFs underlying them, which is very crucial for us to understand for the year ahead, flows of money. As we know, we've talked intensely in the past about money flow being a major factor in markets. And we're all excited to weave this all together, kind of end of year. We get to talk a little bit about silver, a little bit about gold, a little bit about copper, and a whole lot about 3 key points here with Canuc that make 2026 a big execution year with some interesting results and data to support it. So, Chris, great to have you. How are things?
Very well, Andrew. Yeah, thank you.
Season's greetings. Yes, we're just a few days away, and you have a very unique situation here as well. Not only with 2 stories, one in Mexico, one in Sudbury. Sudbury, obviously, we don't have to tell people, has all the infrastructure in the world, all of the geology in the world, lots of past information. People know it very well for mining, which gives it a very big plus. Why don't you walk us through just quickly the last couple of years, kind of quiet, and then how did you get this East Sudbury project as well?
Okay, thank you. Yeah, Sudbury, there's the Impact Basin. You have the majors there. You've got Glencore Valley, used to be Inco, Falconbridge, Inventus, Magna Mining. So, SPC Nickel in the east, the River Valley project, even east of that. So there's a lot of great infrastructure. It's a great jurisdiction. Ontario is really advancing permitting very proactively with the government currently. So we started up there with the tailings project. We needed a way. We have a silver. We think is a silver IOCG in Mexico. 28 claims. We're surrounded by originally a Cisco development. They came after us, and also Barksdale Resources in 2020. And we found silver and magnetite, bonanza grades of silver and magnetite, and we had amalgamated 28 claims there in the trend. In the middle of this trend, it's a 10-kilometer copper gold trend, and offsetting to the north. And we found this magnetite with silver. And it had all the hallmarks of IOC geology as first defined by Dr. Murray Hitzman in 2006. We came a long way on that project. We've done a lot of work on it. We decided that we wanted a cash flow project to be able to continue to work on it, do our drilling, so and pay for it with some cash flow from a project that would allow us to then control the issuance of shares, stop issuing shares.
Yeah.
So we found this tailings project in Northern Ontario in Sudbury. And it was 150,000 tons, grades about 1.2 grams, fantastic leach kinetics, so 80% recovery in 24 hours. And we made a deal with the company that had those tailings. They were not interested in processing. They didn't think we would be able to secure a permit. And nobody had asked us, but we took more than 100 samples. We drilled 10 holes through the tailings. We took 100 samples. A lot of the gold was in the tailings, had come through the mill and into the tailings. It had never been treated with cyanide. So when we took our samples to SGS Lakefield, it had fantastic leach kinetics. So we knew that we'd be able to recover. It looks like we can recover about 5,000 ounces, and at 200 tons a day, which will be our process. We'll be able to recover this in 24 months. We're setting up using frac tanks actually for a vat leach, and so we'll. That was our objective, was to secure at 5,000 ounces. This gold price is 25 million Canadian.
Yeah.
And OPEX is largely covered now. CapEx covered. OPEX might be in the range of $2 million. So it's going to generate some significant profits for us. I mean, by significant for a junior company with no money, by which I mean maybe $15 million.
Yes.
As we looked at that situation, we saw that the company that had it had a very large claim position, seemed to be somewhat distressed, had some fantastic geology. And so in the course of time, for a combination of reasons, we were able to make a deal to acquire that company 100%. And what we got there was effectively for $5 million in stock, we got what we estimate almost $20 million of deferred exploration, 34,000 meters of drilling, 100% owned, 200 square kilometers, almost 20,000 hectares in East Sudbury. Sudbury's our base camp. We're a 15-minute drive east of Sudbury. Past producing high-grade gold mines and high-grade copper mines on the property. So that's just the beginning. There's some fantastic geological potential there, and some near-term production that we're now pursuing at a kind of a grander scale than this tailings opportunity. So now we have the combination. We have that 100% owned asset in Sudbury, Ontario, and we have our silver IOCG in Mexico, and we have cash flow from natural gas wells. We have cash flow starting from this tailings processing, and then there's a high-grade gold lens that we're seeking to permit for a bulk sample.
Yeah.
That'll provide about an order of magnitude more money for us than the tailings.
And that verification hole was great and was received quite well. That leads into the further 2026 kind of program. But you can see how for the last year behind the scenes, it's a lot of that unglamorous work of going through a lot of historical numbers, a lot of data and crunching numbers and then of course that verification hole where it really kind of plays out that next year likely has a lot of news flow, a lot to happen, and could be a transformative year for Canuc.
Yeah, I think what you're referring to is the drill hole that was 12 meters of 36 grams.
Yes.
Right near surface. And so that's one of 140 drill holes in this gold lens number 1. And we've put another 12 holes in there. We reported on the first 3. One of them was 5 meters of 10 grams, and all this stuff is accessible from surface. And we'll calculate a resource for that by March. It'll depend on cutoff grade, but it'll be between 15 and 20,000 ounces. It's accessible from surface, about 80 meters in strike length on surface, 3 meters wide, dips at 45 degrees. And so we will, we'll be seeking a bulk sample permit for that and looking for recoveries about 90%. Because we'll be able to treat the tailings in a more efficient way than they were doing this stuff in the 1980s. So, that could be extremely profitable using contract miners. That's one of 3 lenses that we see on the property. So far, and our geologist tells us maybe 10, 15, and there's a more significantly than that, perhaps a source that the source model for this now is also IOCG for that, and what's 8 kilometers north of McLaren Lake fault system that has copper association with it also. Yeah.
And what's important there is that this is what you like to focus on, IOCG. So this isn't a different system in a different location and different geology, different geography. This is the same type of geology that you've got down in Mexico. So that matters because you've got the same types of systems. I'm not saying they're identical by any stretch, but that does matter too when you're looking for a similar type of system.
Yeah, they're big, and there's iron association with them, and the classification really began around the 1990s. Dr. Murray Hetzman from Department of Economic Geology, Colorado School of Mines, was a leader in that, and they've classified various deposits like this more today than as they began to understand this type of geology and use it as a classification methodology. So. The deposits are big, they're valuable, they get names. Olympic Dam is one, Candelaria, Sossego in Brazil, Ernest Henry in Australia. So the commonality is iron and iron oxides, and it looks there's association, and they come from deep in the mantle. So in the case of Mexico, it would be normal that if you have this deposit type, it could carry silver, because there's so much silver in the mantle in Mexico.
Yes.
And that's exactly what we see. So we see magnetite with bonanza grades of silver, big mag anomalies, and they're offset from the copper gold part of the system, a different zonation, but very, very large potential with great economic potential, given that this large IOCG typology anomaly begins. That one there that you have is about from 90 meters from surface, 90 meters below surface. So it's a kilometer.
Shallow. Yeah.
Kilometer long, about 500 meters wide. Silver daylights on either side of it with bonanza grades up to 2,000 grams, I think, 2,300 grams per ton in certain samples there in the veins. So the veins daylight either side of that, magnetite veins carrying silver, and there's silver in the soils above in this very large magnetic anomaly. So that's the case there. Now in Sudbury, it's actually the same. It's similar in that there's a significant iron association. So the gold at Scatting, it comes with the iron chloride, and there's a lot of work on this that suggests it's MIAC, metasomatic iron alkali calcic system with IOCG potential. And it's again this iron association. You see it there with gold and with copper in Sudbury, particularly in the McLaren Lake fault system. And Government of Canada, NRCan, Natural Resources Canada, are actually up there now doing a seismic survey. They're going to complete in March because their geologists have made the assessment that this McLaren Lake fault system can yield very significant discoveries of this deposit type.
So that's interesting that they're willing to jump in here. That adds an interesting angle to this all as well, because people are becoming more aware of that bigger story, like an economic story of the Ring of Fire and Ontario being quite urgent towards getting critical metals and really, starting things up. It's nice to see that Natural Resources Canada is in there doing seismic work, which will be invaluable to you guys.
Yeah, you know how that worked, Andrew. They reviewed properties across the country, and they had a number of experts, highly qualified PhD experts. In fact, when I was there when it was going on, from Australia, from South Korea, from the Netherlands, they were reporting. There were several PhDs, like about 8 of them. They were reporting to Natural Resources Canada on after reviewing properties across the country on where they might deploy for maximum effect, where they thought they could have would deploy some of their resources to have a major new discovery. Their conclusion was this McLaren Lake fault system, and that work now that they recommended is going on today. So we're going to have actionable intelligence on from that seismic survey, April-May timeframe. It's going to be done in March. Interpretations are going to happen through April, and there's high grade copper mines come to surface along there. 5% copper that was mined 1904. In instances that we've been reported, there's high grade gold and copper associations along that fault. And what they're looking for is a feeder system, iron association being critical for this. And we're going to have actionable drill targets up there, April-May timeframe. And that's not for the vein systems and the high grade gold that we're looking at. This is for that deposit type that would be very meaningful, very large in a good jurisdiction in Canada.
Yeah, and certainly the Sudbury asset, there's lots of work having to be done there in the past. Your jurisdictional risk is minimal to almost nil. You've got great land tenure as well. That's clean and whatnot. And the geological rationale is also very coherent, which is exciting. And you've been able to do this. I'll throw this in to be able to keep G&A down because, and not that we want to discuss you've got a Texas asset that's producing cash flow and energy, but that helps with the G&A. It's a kind of a backstory that, hey, listen, we're able to run this efficiently and get a lot of G&A covered. It's interesting to see as well that you've got the tailings, which is one aspect to near-term cash flow in theory. I'm not trying to speak out of tune here, but also the bigger upside. And that's kind of what attracts people to is that we have a near term with gold and silver, and we'll get into mineralprice.com soon, where they're doing stunning. They're doing fantastic work. You can see near-term cash flow, but also a bigger upside. And I think that's also what people get excited about, especially when they know there's going to be a lot of news coming in 2026.
Yeah, thank you, Andrew. First of all, the tailings is a royalty for Canuc, a 4% royalty, and that should start to produce by May-June timeframe next year.
Perfect.
And then this high-grade gold lens that we're going to have a resource on by March. Our objective is to march that towards bulk sample permitting. We're talking about 20,000 ounces. Okay. Accessible near surface, extremely profitable, 90% recoveries. So that's one of 3 that we see now, and it could generate $60 to $80 million. That's 3 times our market cap in real cash flow. But of course, these systems, they're fantastic. Like our market cap's 30 million. Yeah. So having a discovery of this type, either in Mexico or in Canada, would support a major re-rating in our valuation prospects.
Yes.
And if we can do that, if we can control the issuance of shares, that pretty well has to be reflected in an increasing share price, that revaluation. And that's our objective in having these cash flow projects, expanding on them. The third one, the bulk sample from near surface will generate some real profitable ounces for us in a good jurisdiction right here in Ontario that will allow us to really conduct a great deal of exploration without issuing shares.
And now you had mentioned like the person you got it from, they thought, well, we think you're going to have a hard time getting permits, but you managed to. So that's pretty exciting as well. What's that look like as well moving forward? I mean, I imagine you're probably talking to the Ontario government as well, and not only Canada Natural doing the seismic, but you're probably speaking to all those involved who would love to see just as far as infrastructure and ability to get workers in and gets to market quickly. Anything close to Sudbury would be awesome. I mean, it would be a big win to find something that close by to a big city like that.
Yeah, absolutely. So, look, the permitting environment in Ontario is becoming better and better. Yeah, I listen to Ross Beatty and Minister Lecce in London, UK, and it's an excellent permitting jurisdiction. The circumstances under which we bought McDonald Mine mines. Again, we made this acquisition, and it was about $5-6 million in stock that we paid for the company, and it had at least $20 million of deferred, and then very, very significant upside in our estimation. And certainly, as we've seen the property, we looked at it carefully since acquisition in May, nothing but good news. But the reason, I guess, the combination of reasons was they had to report. One of the first things we did was double check all the assays. We had 34,000 meters of core, all pulps and rejects, and we double checked everything. It was a significant press release, and it took a lot of time. We had a lot of people. We had students up there in the summer sorting these bags, taking them, and then running samples to the assay labs. And the reason we did that was there was a little bit of a clouded history with, there had been some misreporting of assays for the company, and that compromised. I know that there were some very big, real companies interested in that McLaren Lake fault system, which is 100% owned today. And they were looking at possibilities for joint ventures. We're talking about big balance sheets interested there in Sudbury, Ontario. And they got spooked when they saw that the company had to announce that some of their assays had been mucked around with and stuff like that. And that was the context in which we were able to move and make a deal for the company. So because, their funding options and their credibility was compromised for a period of time. Anyways, so our first initiative was to take all of the drill cores that were there, the pulps and rejects, and reassay everything that we saw that was important in the database, and we could see exactly where, as had been confirmed before us by SRK, 6 assays had been modified. Everything else was valid. SRK report stated no material effect on the outcome, of gold assessments. So we came to the same conclusion, and then we started our drill program. So we in lens number 1, there's 147 holes. We've got another 10 going in there. We'll be able to calculate a resource from that. It's very accessible. It's on surface, and it's good grades. 8-9 grams a ton from surface. From surface,
that's a big deal. Costs get cut down huge. You don't need a major camp out in the middle of the mountains up north somewhere. You're close to all of the structure and power, you name it. I mean, all that matters, and it matters quite a bit on whichever aspect you want to look at the tailings and more efficient kind of capacity of cash flow, or if you're looking at the bigger drilling itself. So it's exciting to see that you had to be quiet for a long period of time to work through all of that data, and just kind of get through to have a plan here for 2026. That's what people want to see. They want to see you've got a plan. When's the expectations of hitting these things, and then they can chart to see whether or not you are hitting those milestones. And that's these are not trivial; they're material, and I think that's also draws attention to stories like this.
I think we're going to have a lot of news. Not a one-off story. We're going to have news relating to our cash flow projects and advancing them, and we're going to have news relating to very substantial upside exploration initiatives in both Ontario and in Mexico. So there'll be active programs, a lot of news, and shooting for some big targets.
And that's not forgetting that Mexico still matters. So that there's still good intention there, but just that alone, having all of that, milestones and targets for 2026 in Sudbury. Let's just kind of jump in. We have talked a little bit about Mexico and what's going on there. Just kind of reframe this here. You own San Javier. It's yours, 100% in Sonora, Mexico. What do you think about strategically and operationally? Where does that sit in the framework for 2026?
Okay, so we got involved in the property, almost a decade ago, more than a decade ago, just over a decade ago. But basically, an engineer who worked for me at the Uvidoro mine, his father had staked the silver property there in 1956. And so, he kept asking me to look at it. So we looked at it, and sure enough, very high grades in silver veins that they had mined. And then we saw a couple reports from major mining companies that had reviewed the property that said, okay, we like this. They need to accumulate claims along the trend because because the original claim is just not big enough. 42 hectares, I think 50 hectares, something like that. Very high grade veins in it, 3 of them, with 300, 400 grams a ton, maybe between 3 and 5 meters wide. So very nice, mineable, but too small for the mid-tier silver miners. And they said, very nice, interesting project, need to accumulate claims. So they had recommended to their board that they acquire the claims and then acquire the project and then accumulate claims. And the board said, no, we're not in the business of doing that. It'll take too long. They'll see a public company. It'll cost too much. And they were right, but that presented opportunity for us. So we as a private company started to accumulate claims along trend. And then we put it into Canuc, and we continued to accumulate claims thereafter. And then in 2020, a Cisco development came to the east and north of us, and Barksdale Resources actually came first to the west and south of us. So the area is a mining camp, really, effectively already. They have the San Antonio, what was originally Red Tiger in the last cycle, and Constellation Copper are now Axo Copper, who bought out Cisco Development, and still Barksdale Resources. Now, there's a 10-kilometer long copper gold trend with several mines in it, a couple mills, one on our ground, one other leach facilities up on San Antonio. But the geology looks as if you look at our claims and where the silver is, it's in the middle of that 10-kilometer trend, but it's offset by 1.5 kilometers, which suggests that it actually is the heat source, the intrusion, the main core of the lower levels of the IOCG, as first kind of postulated by Dr. Murray Hitzman in his report to Constellation Copper in 2006. In fact, he was dead right. He had projected, he was on the Constellation Copper ground, which is now owned by Barksdale, in 2006 report, which I think is on our website. And he basically said that that I see all the hallmarks of IOCG, but I don't see magnetite. So when you find the magnetite, you're going to find the lower levels. It could be northeast, north, or southwest of me. And we found it northeast. We found that report 2020. Within a month, we found massive magnetite northeast, 1.5 kilometers of where he had been standing when he wrote that report, and or made the observations that led to that report. And that massive magnetite contains silver, and it's in the center effectively of this 10-kilometer trend offset, which suggests that it's more like that the copper gold part is zonation offset from the center, which is the major intrusion carrying magnetite, carrying silver. That's what's on our claims.
So, what's your overall look here? I mean, the geology is strong. You've got lots of players in that region with lots of potential. We'll talk about silver as well, but a little bit later here. What's your overall take as far as the jurisdiction as Mexico? How are you feeling that they're adapting and moving forward? Because and it does tie to silver. The world requires silver for any of these solar panels and everything. Do you find that it's there were some issues there with Mexico in the past that the government was kind of being a bit, kind of standoffish. They seem to be warming up. What's your overall thoughts there?
Yeah, I think it will get better. This group that's Axo Copper, they were the same group behind Silver Tiger. That's a fantastic success.
Yes,
they got their permits, so they have very effective relationships. They're really effective working arrangements in Mexico, and that's extremely encouraging. As far as we see, our objective there is to have a major discovery of silver on our ground, and then to be an important component of that entire trend, which I think in combination has a great deal of value and a mineral endowment in silver, gold, and copper that's quite substantial.
And all those three, the outlook, if you just choose an investment bank or if you look at Kiko or We Kind of Live, it doesn't matter who you look at, they're very optimistic about gold, silver, copper moving forward. So the overall theme for 2026 looks very optimistic, which also translates well whenever you have a ton of technical geological work being done that could be material for a company. This makes for a compelling story for people to pay attention to, for sure. Maybe we'll jump in here before we talk about just kind of reconfirm some of the news to be expected. Let's kind of shift, because you do have a unique perspective on all this as well, because you pay close attention to ETFs, flows of money, with mineralprices.com. walk us through, what your take is overall, just as a macro look at mining for 2026, the metals, and we'll jump right back into Canuc as well.
Yeah, the principal takeaway from the research that I do, I tracked 240 metal and mining ETFs worldwide, and we see trends with this. We see new issuance of gold equity in ETF in China. That's the first last year. Actively managed ETFs, we're seeing that dynamic spot, and we're seeing the advent of more copper ETFs, and India also. But the main takeaway is that those ETFs, which started in 2004 with GLD, some 240 ETFs now hold more than $600 billion in assets, and the managed funds, which in 2004 held there 114 managed funds, gold, silver, a battery metal, but 100 gold funds out of 114, and their assets were 28 billion in 2004. They're 33 billion today. So so there's been an enormous growth in ETFs, maybe to some extent at the expense of investment in managed funds, and certainly at the expense of investment in exploration companies.
Yes.
So given that the information supports this, that the data supports that this has happened, what are some of the consequences? Well, one is, it's inflationary. If I buy nickel in an ETF, I'm competing for that nickel with a battery company, and it goes into a warehouse. So I'm adding to demand. And I'm adding to demand that is already there from battery companies that need nickel. And my nickel, however, goes into a warehouse and sits there to support the ETF investment I've made. Furthermore, that money may have come from what could have beforehand have been investment in nickel exploration companies or small scale exploration companies, though, because the ETF vehicle did not exist prior to 2004. So this fantastic growth has created tremendous demand for the metals, but has really the investment capital for those ETFs has to some extent measurably come from investment in junior exploration and in managed funds. So it's been the metal side, and this is no secret to anybody in the business, has been chronically, metal exploration in particular, chronically underinvested in for 20 years. And I think these ETF instruments have had a pretty dramatic effect in propelling those consequences. And it's a convenient investment instrument. You can pick up the phone and buy it, and you get your exposure right away. It's in your stock account, and it is a 3-day settlement. It's much different than looking at junior companies where a tremendous amount of due diligence or even private placement documents are required, or the same thing for managed funds that may or may not have entry and exit fees and have performance fees, etc. But when you have such an accumulation of capital directed towards that type of passive investment, the active investment side has been materially compromised. So I guess that's kind of the main takeaway. There's also obviously tremendous growth in critical mineral interest. And that's really come most substantially in the last 4 to 6 years. When we look at that, we see the first countries reporting their critical minerals actually in the late 90s, and European Union and others getting involved, Japan early on, and then weaponization of metal trade. Beginning in 2024 with antimony, germanium, gallium, first export restrictions, and then export bans, from the principal supplier in China. And then in 2025, acceleration of that weaponization of metals. So then, it behooves. And then we see in 2022 and 2023, we see, the Defense Logistics Agency in the U.S. Starting to publish a list of critical minerals. And we see NATO publishing a list of critical minerals for the first time. So these initiatives are a result of the fact that metals, critical minerals, are being used, weaponized. We're looking at 36 critical mineral lists, and the vast majority of them are less than 10 years old. So there's a change.
And that's what's fascinating is this macro overreaching theme that to you especially, and even to me, I've been in this for 8 or 9 years, is like you seem like you're in too early, because like we should have been mining for all this stuff and lots of exploration dollars 9 years ago, so that we weren't in the situation where we're trying to get logistics and supply chains for critical metals where we're relying on one country too much, and people start to realize, wait a second, do we have the metal to even meet the need for any of the data centers, for any of this growth that we would ideally like to do? And you start to realize very quickly, no, you don't. So in a way, this is encouraging, because you can see the ETF is very easy, and that's great. And people will look and go, wow, I've done pretty well. This is done very well. Where's my next logical place to look and go, well, it must be to identify and to understand that we need to find more. And that's where a bigger asymmetric opportunity begins to, kind of propose itself. And it takes a long time too. There's the low factor in, once governments fully acknowledge, and especially say in Canada, we have a strategy for critical metals, we need to do this. It means the rest of the world looks to go, well, are you going to make permitting easy? Are you going to make your country attractive to invest in? Are you actually going to really try and make this happen? And I would argue to say that is happening. Maybe not as fast as I would like to see it, because I'm not patient, but it's happening.
Yeah. In looking at the critical minerals, there's one thing is clear: copper's on almost every list.
Yeah.
Okay. The platinum group metals are on every list outside of Russia and South Africa, because they dominate that field. Rare earths are on every list outside of China. So you see, and then you see, these ETFs have been fantastic, but they're focused around gold, silver, there's copper and nickel, but there's no, they have some uranium instruments, but there's not, you don't have cobalt. It was discontinued. You don't have a lithium per se instrument. You don't have, interestingly, I think, one compelling opportunity in potash. There's a lot of interest, and it's on a number of critical mineral lists. The biggest suppliers are Russia and Belarus, Canada obviously being in the game, and it's a critical mineral as identified on many critical mineral lists, and it would be fairly easy to have an ETF that could result in warehouse stockpiling of potash. So. But you don't see that. You haven't yet, anyway, seen the migration and the expansion of ETFs to include those critical minerals. But I think it's starting to come. Like I say, they've got uranium. They're moving on some of the other metals, and there's opportunities in there.
Yeah, sometimes it's and this be a bit critical, but sometimes people forget about the boring stuff, and they kind of assume, since everyone's off talking about robots and drones and AI, that we've got all this other stuff figured out. And that's further from the truth. I mean, if you listen to any of that story, whether it's Elon Musk or Meta or not, is that they'll say our biggest bottleneck is energy. So whether that is going to be your solar with solar panels, silver, whether it's uranium with nuclear, whether it's all the copper wiring for the grid and updating the grid and being able to meet the standards to not only produce chips with like antimony, but to just get the power. And I think that story takes a bit longer for people to really digest, in the sense that they just kind of assumed, well, we've got that taken care of already. We figured that problem out. And the realization is, no, we haven't. And we need to be focused on all of these critical ones. They're not critical just for propaganda's sake. They're absolutely critical if you want to meet any expectations or goals of even if you take away the AI story and how much energy it needs on anything else that people want to do to keep things clean and green, or do any type of transition on top of that. So it seems like people are coming around. It is more on the news. It's more open. People are coming to terms with it. And we certainly have a Liberal government here in Canada that is mentioning projects that they stand behind. Certainly Ontario is very aggressive with it, which is great. And they've been looking for these types of projects. It would be ideal for them. Once again, infrastructure is close. No need to have a big camp setup costs. In a known location and jurisdiction that likes mining, has been mining for a long time, the rules are easy to follow. These are all big positives for Canuc. And I want to kind of bleed right back into what you guys have here and just remind people, because we've had a few hundred people join in here the last 10, 15 minutes, that if we can kind of remind people this whole conversation isn't just about the year end and talking about the critical metals and precious metals, but it's to let people know all the quiet, hard work that someone does with all the data in 2025. That 2026 is really an execution year for Canuc. So maybe you can kind of just launch us back again with the thesis for 2026 that you've got set up here.
Yeah, thank you, Andrew. So resource nationalism and great power competition, driving significant demand for metals in good jurisdictions. So number one, jurisdiction, very large potential with the deposit types we're after: copper, gold, and silver, in two separate IOCG environments, one in Sudbury, Ontario, Canada, and one in Mexico, Sonora State, Mexico. Both leading jurisdictions. Perhaps I would argue, because I live here in Ontario, is conceivably one of the best jurisdictions in the world with the government that we have today and the geology, and so we have that. We have 100% ownership of these assets with significant upside exploration potential, and we have a path to cash flow and significant cash flow from natural gas, from gold tailings, and then from high grade gold lens mining near the surface that can be permitted as bulk sample that ultimately will allow us to constrain the issuance of shares. That's how we can work to re-rate higher the value of the shares that we have, is to first of all control the issuance and then to be successful in our exploration undertakings. There are a lot of great evidence to support the potential for IOCG geology, for copper and gold in Sudbury, Ontario, and then also in Mexico with silver association.
One of the great things that we have with our drill sheet is it's able to identify if someone has catalysts and if they are material. And you guys certainly have a number of catalysts that are material, which is nice to see. I mean, that's important, because it's not just we'll have some news and it'll be a bit promotional, or maybe kind of, well, it's interesting infrastructure development news, but you're going to have lots of news flow. We already know that. We can't guarantee timing. I mean, we've got a time frame. Assays are always tough. Sometimes they come in on time, sometimes they don't. But you're going to have material news flow, certainly for the first 6 to 9 months. That can have, and it is an execution play at this stage that can have a significant effect on stock price. And although I like to stay away from what a stock might do, we have to acknowledge the fact that if you can get cash flow in, that's a material change. That's very positive. And if you can get a great result in data from the seismic, that adds a huge benefit as well. So that, I think, is important, that people see that it's got all the components and the big hit possibilities or catalysts that could be material to pay attention to.
Yeah, I would characterize it as results-driven, stepwise development of value, which is how we expect and plan to undertake the value creation for shareholders for Canuc.
I think that's important. You've got the runway, you've got the optionality, you've got some flexibility. This year is going to be exciting. We're going to keep our eyes peeled on you to see what's happening, because, like you said, people are starting to wake up. A lot of people have done well, whether it's just on silver or gold or sometime, or even ETFs. They're going to start paying attention to, we're a resource country. We should be amplifying that. We should be allocating money, I would say like a pension fund level, into exploration, so that Canada could set itself up for truly being a dominant energy resource country, which it could be. I mean, there's no reason it couldn't, and really hone in on an incredibly bright future. And you guys are going to play a part in that. And I appreciate your time, Chris. The big seasons are here, and a bit of time off. But we really appreciate you spending the time with us today to walk through this, and not only just the metals and what you track as far as flow of funds, because that is critical for people to understand if there's going to be a positive year with funds flowing in. We like the time and the fact you're pointing out these major catalysts that are going to occur in 2026.
Yeah, thank you, Andrew. My father was a diplomat, and he said my most valuable asset's my Canadian passport. I feel like we won the lottery being Canadians, and there's a fantastic mineral endowment in the country, of course, much of it yet undiscovered, and we do have all the potential that you just referred to. Yeah.
That's perfect. Well, we'll keep our eyes posted on any news that comes in. Once again, we love big catalysts, big milestones that can have material effect. So we appreciate it again, Christopher, and we'll talk to you real soon. Enjoy the time off because it will be a busy year.
Thank you. You too, Andrew. Thank you very much.
Take care.
Bye now.
Most investors lose money in junior mining stocks, not because the sector is broken, but because they don't know how to decode them. Headlines, hype, a few flashy drill holes suck people in, and 80% of those companies will never make it. I'm Andrew.